Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about STARPLUS Legend Holdings Limited annual report. STARPLUS Legend Holdings Limited offers a diverse range of businesses and services. At the core of its operations are retail and IP creation and operation businesses in China. The company develops and sells health management and skincare products through various channels, including e-commerce platforms and social media stores. In addition to product sales, STARPLUS Legend Holdings creates and manages celebrity IPs, providing planning and management services for media content production and events. It also licenses its celebrity IPs and sells related merchandise. Furthermore, the company engages in media content creation, encompassing IP program production, event planning, digital and AI content production, online trading management, restaurant management, and music concert investment. The breadth of STARPLUS Legend Holdings services extends to online trading management, restaurant management, and investing in music concerts and other events. The company's comprehensive portfolio reflects its commitment to innovation and diversification in the entertainment and retail sectors. STARPLUS Legend Holdings Limited maintains a market capitalization of $5 billion, broadly in line with the industry peer group. STARPLUS Legend Holdings Limited trades at a higher price-to-book ratio of 3.01 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 17% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for the company are multifaceted. Firstly, the integration of intellectual properties with offline scenarios has been successful, contributing to revenue growth. The launch of new products such as MODONG Magic Sicilian flavored coffee and energy synergizing polyphenol drink has also been a significant driver. Additionally, market recognition for MODONG coffee in the bulletproof drink market has continued, further boosting revenue. Strategic investments in various companies have also paid off, with high scarcity value and robust commercial foundation of core IP assets contributing to growth. Strong user resonance, sustainable content vitality, and multi-platform expansion have also been key drivers. Furthermore, an increase in sales orders has resulted in a rise in contract liabilities, while the sale of health management products and skincare products has seen a 15% increase. On the other hand, the primary drivers of revenue decline are largely related to specific business segments. The production of film and TV program rights has seen a significant decline of 60%, while event planning and management has declined by 73%. Celebrity IP management has also seen a decline of 50%, and licensing and royalty income has decreased by 38%. It is worth noting that these declines are largely isolated to specific business segments, and the company's overall revenue growth remains strong. However, it is essential for the company to address these declines and identify opportunities for growth in these areas. The net income of the company experienced a significant decline between FY 2024 and FY 2025, with a decrease of approximately 43.9%. The net income dropped from RMB 12.8 million to RMB 12.1 million, indicating a substantial reduction in profitability. Profit margins also suffered a decline during this period. The gross profit margin decreased by 17.2%, dropping from 56% in FY 2024 to 38.8% in FY 2025. Furthermore, the net profit margin turned negative, with a loss of 10.8% in FY 2025. The reasons behind these changes are multifaceted. The decrease in government grants received by the company was a significant contributor to the decline in net income and profit margins. Additionally, impairment provisions for trade and other receivables, as well as an increase in cost of revenue attributable to new retail segment, further exacerbated the decline. The increase in gain from fair value changed in financial assets at FVPL had a positive impact on the company's finances, but it was insufficient to offset the negative effects of the other factors. The decrease in revenue from IP creation and operation business also played a role in the decline in net income and profit margins. Overall, these changes indicate a challenging period for the company, with significant declines in profitability and net income. The company's financial performance indicates a significant achievement in terms of operating cash flow. According to the provided information, the company is indeed generating positive operating cash flow, as confirmed on page 110 and further supported by specific numbers. Furthermore, the data presented on page 161 provides concrete evidence of this success, with the company reporting $44,290 million in operating cash flow for the year ended 2025. This substantial amount demonstrates a strong ability to generate cash from its core operations, which is a crucial indicator of financial health and stability. The company's debt level has undergone significant changes over the past year. According to various financial statements, total bank borrowings increased from RMB 5 million to RMB 65.8 million, representing a staggering 1,130% increase in current liabilities, borrowings. The debt level also saw an increase of RMB 65,842,000. Furthermore, total financial liabilities rose by RMB 69,816. On the other hand, interest expenses have shown a contrasting trend. Despite an initial increase in interest expense on bank borrowings from RMB 443,000 to RMB 1,462,000, the overall interest expenses decreased by 1,019 RMB 0. The interest accrual for 2025 also saw an increase of RMB 1,522,000, but this was not reflected in the net interest expense, which actually decreased. The performance of various segments and regions within the company has been mixed in recent years. On a positive note, celebrity IPS, AI technology integration, and health consumption products have all performed well, indicating strong growth and adoption in these areas. In contrast, new retail business saw a significant decline of 47.3% from 2024 to 2025, suggesting that the company may need to reassess its strategy in this space. On the regional front, mainland China experienced a revenue decrease of RMB 100,048,000 over the same period, while other regions also saw a substantial drop in revenue. Overall, these results highlight areas where the company is excelling and those where it needs improvement. By analyzing these trends, the company can make informed decisions to drive growth and increase profitability. Management's outlook and strategy. A comprehensive approach. The company's management is committed to a comprehensive approach that encompasses various aspects of the business. On one hand, they are focused on deepening emotional value creation for IPS, advancing commercialization of CHOU IP, and expanding its ecological footprint through celebrity collaborations. Page 8. This strategic direction aims to create a robust and extensible IP ecosystem. Furthermore, management is accelerating the construction of an omnichannel consumption ecosystem by building a robot shop network with at least 1,000 units by 2026, opening a flagship store in 2026, and exploring new business directions such as smart hardware and immersive experiences. Page 9. This move aims to integrate trendy collectibles, interactive experiences, and fan communities. In addition to these initiatives, management is prioritizing 3 strategic directions: expanding diversified IP matrix and deepening development and operation, enriching product portfolio with market competitiveness centered on celebrity IP and big health sector, and strengthening omnichannel layout to accelerate online and offline sales network development. Page 14. This multifaceted approach demonstrates the company's commitment to growth and innovation. Management is also committed to environmental sustainability, focusing on reducing indirect Scope 3 emissions, encouraging suppliers to adopt more sustainable components and materials, and employees to use remote meeting tools to reduce unnecessary business travel. Page 237. They are extending their low-carbon philosophy to upstream and downstream value chains and implementing measures to improve energy efficiency. Moreover, management is committed to protecting the ecological environment and utilizing natural resources responsibly, actively exploring and adopting higher environmental standards and industry best practices to enhance sustainability performance. Page 244. This commitment includes responding to climate change initiatives, including the Paris Agreement and China's dual carbon strategic goals. In terms of product safety and consumer rights, management is prioritizing quality and attentive service, establishing a product recall mechanism to safeguard quality and maintain compliant operations. Page 268. They are also focusing on community investment in areas such as education, environmental concerns, and labor needs, contributing resources, money, or time to these focus areas. Overall, the company's management is taking a holistic approach to its business, addressing various aspects of sustainability, innovation, and growth. This comprehensive strategy aims to create long-term value for stakeholders while promoting responsible business practices. The company has a history of paying dividends to its shareholders. This is evident from multiple sources within the provided text. On page 150, it is stated that the company distributes dividends out of profits generated by entities established in the PRC after January 1, 2008. Furthermore, on page 208, it is confirmed that the company has paid dividends. Additionally, page 220 provides more detail, stating that dividend distribution is recognized as a liability in consolidated financial statements, indicating that the company has indeed distributed dividends to its shareholders. There are concerns about inventory buildup or supply chain disruption in the company's operations. One indication of potential issues is the significant increase in cost of goods sold by 129%, page 143. This could be a sign that the company is struggling with inventory management, potentially leading to stockpiling and waste. Furthermore, physical risks such as global warming and sea level rise pose a threat to infrastructure and supply chain stability, page 246. These chronic risks may lead to delivery delays and increased costs due to damage to transportation routes and storage facilities. While the company has established an internal inventory control system to handle expired products, this is not enough to mitigate the potential disruptions caused by these physical risks. Overall, these concerns highlight the need for the company to reassess its inventory management strategies and supply chain resilience in light of these emerging threats. That concludes the financial summary for STARPLUS Legend Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.